It's almost Tesla earnings time. Well, actually not. That's August 1st, but man, I can't wait. This is your morning jolt, and investors are going to certainly look at that Tesla earnings report later in the week. But first up is the big story. We're still getting over the Facebook second quarter earnings meltdown last week, and I got a good note from Goldman Sachs strategist David Coase, and I love this guy's stuff. He points out the top 10 contributors in the S&P 500 have accounted for 62% of the S&P 500's 7% year-to-date return. Why should that scare the hell out of you? Because that is essentially masked narrowing market breadth on the S&P 500, which often suggests a sell-off more broadly in the stock market. Now, on Real Money, Helene Meisler, a longtime Real Money contributor, writes about market breadth every single day, so read her column. But there is a worrying undercurrent in this market. You need to be worried about it, especially after Facebook and Netflix, how the market reacted negatively to that. If Apple disappoints in any way on its earnings this week, there goes the market. Next up, stock spotlight, NVIDIA. You know, this stock has been a home run winning position for Jim Cramer's Action Alerts Plus member club, but the stock has underperformed since late June on no real news, but essentially NVIDIA remains very dominant in its space. I got a good note from one of my Wall Street people I follow at Arthur Wood, a smaller firm, but always interesting stuff. Bottom line, company is dominating in the data center and sorry, it's Monday, and gaming market. And it's going to be hard to bet against NVIDIA longer term. My call, I think SoftBank, which has a 5% stake in NVIDIA that it took in 2017, within 3 years buys this company. I mean, they're just doing too much really good stuff not to buy it. Next up, around the street, got a lot of stuff going on. This place has been on fire. First up, Tesla earnings, like I mentioned at the top. We had launch our new Tesla weekly column with TheStreet's Brett Kenwell. He takes a very deep dive and crunches the numbers on Tesla. Bottom line, he suggests that Tesla may need to raise $10 billion by 2020 if it wants to make more cars and if it wants to build its gigafactory. So Elon Musk, very interesting. Speaking of Elon Musk, he hand-delivered a Model 3 to a millennial-looking couple over the week, and I just retweeted that at Brian Sazi. God, you kind of wish he just gets to work. But anyway, let's see. Apple. In the latest Tech Skeptic column by Andy Gao, she wonders out loud if Apple has lost its cool factor. Very important to think about as you head into the company's earnings this week. And I think that's really about it. We're still trying to get our footing here after a wild week in earnings last week. We got Caterpillar, we got Tesla, we got Apple this week. Lots of stuff going on. And actually, I had one question from one of our Morning Jolt members on the newsletter from Tim. He wants to know, how does he select a stock? Basic question, but very important. My quick tip, look at stocks that are outperforming. That is usually a good sign that there's something good going on with the company. And besides that, check out TheStreet.com. We will tell you how to navigate these markets. That's all I got for my man Tim. I'll see you guys later. Sign up for the Morning Jolt newsletter down below. See you guys later.